Kitco News special coverage of the PDAC convention is brought to you by GoldMining and Uranium Energy Corp.
We're speaking now with Alastair Still, CEO of GoldMining, about the latest developments in the company as well as the latest developments in the mining space and what this means for investors around the world. Alastair, welcome back to the show. It's a pleasure to have you on Kitco.
Thanks very much for having me, David. Pleasure to be here today.
We've had a great partnership with UEC and GoldMining for many years, so I appreciate your being here today, Alastair. We're going to talk about your latest partnership with NevGold as well as latest company developments, but first I want to talk to you about the markets at large. The gold mining sector, like most stocks, have not had a great year this year. What's it like raising capital or expanding into new projects or forming strategic partnerships during a bear market? What are some of the challenges that you have to overcome as a miner right now?
Well, certainly having a strong balance sheet is sort of a key item to enter into these turbulent waters. I think gold mining is actually better positioned than most. Actually, we're very well positioned because we have such a strong balance sheet. We're sitting on almost $10 million in cash. We have a strong financing means available to us. We've got strong institutional investors. We've got strong retail investors. So having access to capital has been always one of our strengths, and it remains so. But being prudent with that capital is very important in these times. And I think gold mining has shown over the years we have been very efficient with our capital. We're actually now starting to advance our projects, making the most use of that resources that we have. And we're showing some good positive signs from that now.
I know this question isn't as applicable to the gold sector as it is to, let's say, uranium, but suppose you were to halt production overnight. I know that's impossible, but suppose it were to happen, how much runway would you have?
Oh, we're not in a producing environment, so we've got a ability to control our capital very efficiently. I mean, we can go for several years. Obviously, we've got plenty of runway. We've got resources at our hand. We've got, I say, the balance sheet is made up of cash and a very strong equity portfolio. The biggest portion of that is shares that we have in Gold Royalty Corp. That's a company we created last year, spun off, and we have over 20 million shares of that company. So these are all items that help our balance sheet, and an extra bonus that a lot of companies our size don't have is that those shares in Gold Royalty are now paying off a dividend as well, and it's close to $1 million Canadian a year in dividend income. So lots of strength in our balance sheet to see us through any turbulent waters.
Okay, and tell us about some of the projects that you have. Walk us through the portfolio of gold mining.
Okay, absolutely. Well, we have a very diverse portfolio. It's all within the Americas. We're very gold focused. We have close to 32 million gold equivalent ounces in our resource statement. That consists of over 16 million ounces measured and indicated gold equivalent, another 16 million inferred gold equivalent ounces. So very large portfolio. It's diverse. It's in 5 countries in the Americas, all stable jurisdictions. And having that diversity of projects within the Americas really sets us apart from a lot of our peers, and actually compares us to much larger companies than we have. And really, our job now is about daylighting value from that portfolio, and we started that. I mentioned the Gold Royalty spin-off, and we also had an announcement earlier this week, actually just this morning, of yet one other project we capitalized some value or crystallized value from our portfolio. Okay.
Now, the gold price obviously is very important for juniors and seniors. The gold price has been holding steady throughout the greater part of this year. It's seen spikes and then it's come down, but more or less it's performed relatively well against equities. What's your take on where the gold price is headed from here?
Well, we're very much still bullish on the price of gold. I think what has happened in the past, why our company has been so successful, is our chairman and founder, Amir Adnani, and his team have been very successful in purchasing properties when there were dips and downturns in the market, and picked up a lot of the properties we have right now when gold was close to $1,200 or $1,300 an ounce, and copper close to $2 a pound. So we were able to create buying opportunities. We think we're in a pretty stable gold environment right now, and actually we think there's runway for gold to increase.
$1,800 gold, is that expensive or cheap from an M&A perspective?
From an M&A perspective, it puts a lot of projects on the table because it's a good price for projects to operate at. If we can maintain that price, a lot of operations will stay in play. I think, though, the gold price is going to go higher. We are all talking about inflation. That's a tip of everyone's tongue these days. And I think as the markets get turbulent, as people are having some insecurity about their investments, we've seen the destruction of some value in the Bitcoin and the technology stocks. I think people will really seek out gold as a safe haven. It's traditionally done that over time. It's done it for millennia. We think it has that value today. It's a store of value. It's a protection against inflation. So I think that's only positive for the price of gold.
But can they see gold miners and gold equities as safe haven assets as well?
Absolutely. I think the two go hand in hand, especially when you look at what the assets are in a company and the operators. And I think that's something our company excels at. We've added to our management team in the last year. We've brought in some 100 years of technical experience for very experienced individuals who worked at major mining companies. We've got a strong balance sheet. We've got strong assets. All these things really give us one important advantage, which is a highly leveraged price to the price of gold. With that strong resource base, change in the gold price can have a dramatic increase in our equity price.
But just to provide a counter argument to what you said, from somebody who may be a little bit skeptical still of investing in the gold space, what would you say to this? Somebody looking at charts of gold prices and gold stocks might say, well, this year gold stocks, not just your company, but all gold stocks have moved more or less in tandem with the broad equity markets, not so much with the gold price, which has been relatively flat. And so during turbulent times, during perhaps a market sell-off or a recession, maybe it might be more prudent to just hold the physical metal versus going into equities. How would you respond to that?
Well, it's an interesting question, but I would say really what that creates is a buying opportunity. As you say, the gold equities have moved in step with a broader market. They've decoupled a bit from the gold price. You know, the gold price is still over $1,800 an ounce as we're speaking. We think it can go higher. I think that's a buying opportunity. And I say with such a great exposure to a large resource base, that creates leverage to the gold price. So it's one thing to invest in the physical metal, but if you're highly levered to it as well, that's an even better investment opportunity in my opinion.
Okay. Alastair, let's talk about your future plans. But first, tell us about the strategic partnership you've made with NevGold, and then we'll go from there.
Okay, excellent. Yeah, we did announce this morning a divestiture of one of our assets. Our Almaden project in Idaho was one of our non-core assets. We'd obtained the property only 2 years ago. We saw an excellent opportunity to partner with NevGold on this. We've realized a total value of $16.5 million for the property. So that's a significant return for us. We paid just over $1 million for it when we acquired it. But more importantly, I think we formed an important partnership with NevGold. We'll have a significant equity position in their company. We stand to realize additional benefits as the project advances from contingent payments. And as well, we're making a significant investment into NevGold to see them through the next stage of development. We're committed to financing into NevGold, and they in turn are committing to spend over $2 million on the project to advance it. So it's a win-win on both fronts. It's a great opportunity for us to crystallize value. It's a great opportunity for NevGold to build their pipeline, and it gives us continued exposure into the future as they continue to explore and grow a regional portfolio.
How much is this expected to add to your reserves?
Well, this was only counting about 3% of our total resources, so a very small portion of our portfolio in a big portfolio, and to capitalize value for it for significantly more than we had paid for it, and to still be protected on the upside, it's a great deal for us.
Right. Is it difficult to make accretive deals right now in an environment with rising interest rates, when the markets are down, and perhaps companies are asking for a premium during turbulent times?
It is, and I think an important thing about having any successful M&A deal is really to have a win-win relationship and to form a good partnership. We saw this as a great fit with NevGold. They have an experienced exploration team who's currently drilling a project in Nevada. Adding this to their portfolio and seeing it move forward creates value for them, creates value for us, which ultimately translates into value for our shareholders.
What was the rationale behind this partnership? When you're evaluating deposits and companies to partner with, how did this come about and to land on your radar?
Well, we were approached by NevGold because they were active in the area. They wanted to grow their portfolio. We evaluated their team, we evaluated their current assets and saw it as a good fit. And the other thing we had to factor in was NevGold was not one of our core projects at the present, and crystallizing value on it lets us focus even more on some of our core projects, which we can also talk about here, especially our latest developments, for example, that we're drilling on our La Mina project in Colombia. It's the first time our company has launched a drilling program. We put a PEA study, a preliminary economic assessment study on La Mina earlier this year. It showed it had extremely good economics. It was an NAV over $300 million, so we were encouraged by that. We saw exploration potential. So we started a drill program to drill an adjacent deposit, which is not included in resources right now, which we think has the great opportunity to add near-term value to that project. So that's just one project that we're currently drilling on. And of course, we also have opportunities to further unlock value in the portfolio. We talked about how we created value by a transaction to create gold royalty last year. But we see a similar opportunity this year with our project in Alaska called Whistler, which has close to 10 million gold equivalent ounces. It's a very large project. It's not far from major infrastructure in Anchorage. The state has announced plans to advance feasibility study for a road to the project. We're very excited by it, and we think that by spinning out that project into a new entity, which we've called US GoldMining Inc., which lets us focus on the asset, let's stay in America's focused. We've brought in a highly experienced CEO to run that, in Tim Smith, who has a great track record of discovery and advancing projects in the north. We think that's a great win for our shareholders going forward on that project as well.
Okay. And any other company developments you'd like us to know about?
Well, we have a number of projects, and I say, well, our key is staying focused on the important ones. We do have a project in Brazil called San Jorge, which is a high-grade open pit resource. We have been doing some preliminary economic assessment work on that. We're developing a new model for the project. We have gone back in for an extensive period of resampling some of the older core that was not previously sampled. We've collected over 3,000 samples on that, so we're compiling that information, advancing that project. So that's another one of our core gold projects. But one thing that we don't talk about, of course, is that being gold focused, we also have over 2 billion pounds of copper on our resource statement, which is a nice bonus, especially at current copper prices. And as an added option, we also have a uranium project, which is sitting in our portfolio, not our core focus. It's a very large land package in the Athabasca Basin, one of the hottest areas on the planet for exploration these days. And our Rhea project is 125,000 hectares of land that is attracting a lot of attention, could easily be spun off into a new company.
I'm curious as to why you have a diversity of different assets under your portfolio. Wouldn't an investor want you to be focused on just producing one type of metal as opposed to spreading your resources too thin, Alastair?
Absolutely. We're very much focused on gold. The copper comes as a byproduct at our deposits, so we're not chasing copper itself, but it comes as a byproduct, which is an important credit we realize. We would also have a significant byproduct of silver, comes with some of our gold-based deposits.
Yes.
So definitely gold-focused with copper and silver credits. I would say the uranium project, it doesn't fit in with the current portfolio. We acquired that from a previous transaction. We're not active on it, but I say with the current uranium prices and the activity in the sector, that's attracting a lot of attention, and really that's a free option for our shareholders. That'll unlock value at some point to our benefit.
No doubt energy costs, raw material costs, labor costs have all gone up for you as they have for every other miner here at the PDAC. How are you fighting these costs?
It's not as much a direct factor for us because we're only really at the exploration stage. I think more on the operational front, and project developers who are actively building a mine at this time are really seeing some of those direct impacts of inflation. We're drilling right now on a program in Colombia. We've been very successful at managing our costs, mitigating our costs with a strong local team there. We have a good handle on the local conditions and the local operators. So it really hasn't had a significant impact on us. It's more of a question for identifying which companies can withstand the operating and the development stages.
What's your 5 to long year plan, Alastair? I'm looking at your own personal professional background. You've worked with some of the largest producers in the world, Newmont, Goldcorp, which later got bought out by Newmont. And so you've had a history of operating mines. Are you thinking of bringing this into production, or are you thinking of spinning it off and selling it out? What's your exit opportunity, basically?
Well, I'm not so much thinking about an exit opportunity. I think of a growth opportunity here, and that's what really got me excited to come to this company. And I looked at the portfolio, I looked at the diversity, I really saw it like a blank canvas. It was really waiting for someone to take it, move the projects forward, and show and unlock value.
Yes.
I don't think that we're going to compete with major mining companies to build these assets, but we can advance them to daylight value where it gets to the point where companies will be attracted by them and come to develop them on another front. If we advance them far enough to move them ourselves, we can do that. That's not our focus right now. We're not mine builders. We're developing assets that can be taken on by the mine builders and moved down the pipeline. And that's what creates the greatest opportunity and returns for our shareholders.
So you are thinking of having it get taken out at one point?
Well, we'll be looking at opportunities on our individual assets. People come to look at them much like our deal with Almaden. It's one of our smaller scale assets, but someone came in, they saw the asset, they wanted to acquire it, and we came up with a very sound deal for our shareholders.
Okay. At what gold price would you be comfortable selling your asset? Let's put it this way.
Well, I don't know if there's a gold price that we can pick, but one thing I can put a good benchmark on is one of the values that we look at is our enterprise value per resource ounce.
Okay.
And I think that's a metric that really makes our company stand out. So if you took our market cap and took out our cash investments and our balance sheet, and you took that remaining, and that's our enterprise value, and divide it by our resource base, we're getting valued at something like $5 per ounce, which is an unheardedly, absurd low value. I think our opportunity.
You wouldn't be comfortable selling at that value.
No, that's what I'm saying. It's an underappreciated assets. We see companies trading at $20, $30, $40, and $50 per resource ounce. So we've got a huge gap there. That's the win for our shareholders. Once those assets start being recognized, daylighting their value, and we get up to where more of an industry average is, that's when I think the real value for our shareholders comes in.
Well, again, a skeptical investor might ask you, Alastair, things are usually cheap for a reason, so why is it so undervalued?
It's a great question, largely because the assets have been put in one basket, and they haven't seen daylight, they haven't had activity on them, so people don't even know they're there. Constantly, I'm going on road shows, I'm meeting with major companies and intermediate developers, and they're saying, well, we didn't realize you had that in your portfolio, tell us about it. And then we explain the asset, and that's where the opportunity comes, is daylighting the value. It's easy to look at a basket and say, well, we don't want to look at the basket because we don't know what's in it. We're now opening that basket up and showing the value of each of these individual assets is worth significantly more than they are as a whole.
Alastair, I'm curious to understand your career progression from working at some of the largest gold miners in the world to now at an explorer. You're a Helmian explorer. That must be a big transition for you, is it not?
It was a big transition, but ultimately I'm a gold bug. I got into the industry because I liked gold. I wanted to be a geologist. So I chased that dream. I became a geologist at operating mines, saw mines being operated, built mines myself in South America, worked through M&A transactions. But at the end of the day, I love gold. I want to see projects advance, and this is a great portfolio to move forward with.
I'm curious to how the industry has progressed over your career. One of the changes that I've heard people talk about is the depletion of reserves, or at least the plateauing of growth, the reserves growth. And so what we're seeing around the world is the phenomenon of peak gold. And miners are responding to this phenomenon in different ways. How is it for you at Goldcorp and Newmont?
Well, I think it's exactly what it was. It was peak gold, and I think the operating companies really were faced with some tough questions, several years ago, where they had to focus on returns and paying dividends to their shareholders. And to do that, they made some short-term decisions, such as cutting off exploration. The long-term impact of that was the majors were not able to replace their reserves in their own portfolio. So there's a gap. Over about a 10-year period, the reserve base declined almost 40%. So that really creates an opportunity for us, where we have a resource base, a highly rich resource base that is sought after by companies who are looking to fill in those gaps in their development pipelines.
Well, there's two philosophies that are heard for expanding a senior producer. One, you could invest in greenfield exploration yourself, or two, you could acquire existing deposits. Which one do you prefer?
Well, I think there has to be a balance. The disadvantage of having the greenfields exploration is time, and you can't control what you're going to find. So you can invest the money, and eventually you will find something is the plan. You don't know when, and generally it's a 10+ year process these days, by the time you discover something and get it built. The beauty of having M&A activity is you already have that resource base known. It may have some upside, may have some opportunities to expand on it, but at least you can jump up the curve multiple years by going into a known resource.
I want to finish on fundraising. Raising capital right now, what's your preferred avenue? Is it debt, equity, or do you're not a producer, so you can't rely on cash flow?
Yeah, well, we're not in need of any capital at the moment. I say last quarter we had close to $10 million on our balance sheet, so we're very strong that way. We had a facility last year with the Bank of Montreal, stepped in for a $20 million margin loan facility. So for a company of our size to have that strength on our balance sheet and those abilities is great. But right now, really, we don't need money. We've got all the plans.
What's your debt to total assets ratio right now?
The debt to total asset ratio, good question. The debt is really the first draw we took on that margin facility, so it's just over $10 million.
Okay. Are you concerned about rising interest rates? Would that impact your interest expenses?
Oh, not significantly. I mean, that was a very well-timed loan facility. We've got the ability, to choose the right time to pay it off, and say with such a strong balance sheet, it's not a concern for us.
Are you due for refinancing anytime soon?
No, we're set with a very strong balance sheet right now.
All right, Alastair, thank you so much for your time today.
Yeah.
I appreciate you coming on Kitco.
Yeah, pleasure to be here. Thanks for having me, David.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more at PDAC.
Kitco News special coverage of the PDAC convention is brought to you by GoldMining and Uranium Energy Corp.